Okay, everybody, it's me, Gregory Mannarino, and this, right now, is my newest segment of Markets A Look Ahead. Big week, lots of stuff going on. We just broke through a key level to the downside with regard to the S&P 500, continuing bad economic news, and we do need to clarify a few things. Let's start off with this. Okay, so as I just said, and you and I have been watching a very key level on the S&P 500 over the past, week, literally. And the fact that we did break below the 4150 mark on the S&P 500, look, let me define something for you real quick. We are in a technical correction. That's all this is. I mean, a lot of people are talking about a market crash and all kinds of things, but let's define something here. A move of 10% or more, but not greater than 20% to the downside is defined as, by definition, a correction. The S&P 500, the broader market, has now fallen 13% from its all-time high. This is, again, a technical correction by definition. Okay, that's what we have. Nothing more. Okay, are we going to get something more than that? Well, let's see. There's no big crazy moves going on here in the debt market. The 10-year yield remains stable. We're about 2.9 on the 10-year, and we're going above 3. You know this. I've covered this at length to the point of nauseum lately. We've been watching the market play out pretty much like we have expected it to. Okay, so with that said, there's a lot of people out here who are trying to, I think, frighten people, honestly. I pay attention to what's going on. A lot of YouTube channels out here with a fear agenda. Once you have even an ounce of fear inside you, you lose. You freaking lose. You must understand what you're looking at. That is, again, the market in a technical correction, like I've been explaining for, since the high back in the beginning of January. Okay, why is it, I think, that some of you are in such great fear of nothing more than a technical correction? I don't know. It's an individual thing. Maybe you shouldn't be here in the market, honestly. Real professionals, we don't fear this kind of stuff here. We don't fear anything. We look for opportunity in the market, and I'm not just talking about equities, people. The market encompasses everything from what's going on here in the debt market, and obviously into the equities or stock market as well, precious metals, cryptocurrencies, the whole gamut of things that are going on, commodities, quite obviously. So, look, we need to redefine that as well, maybe. When I'm talking about the market, I'm not just referring to equities. I think most of you who follow this blog are well aware of that, and this is why we are diversified, why we are spread out. Now, look, let's clarify a few more things for those of you who follow this blog. I am concerned about one thing, and one thing only. That is the inevitable meltdown in the debt market, which we all know is going to come. And that is going to lead to a stock market crash of epic proportions. And this is by design. We have a mechanism in place that has inflated a global debt bubble, which is not only responsible for these unbelievable distortions across the spectrum of asset classes with regard to their price action, but this is also the greatest threat to human life on the planet. Forget about wars, disease, or anything else. This debt bubble, when it implodes, is going to change everything, and this is by design. We are being led to a climax. That is all I care about. I do not care about corrections in the market, pullbacks in the market, or anything else. I don't care. Okay, we understand professional traders, and I'm sure a lot of you out here are professional traders as well. We don't care about technical corrections or anything else. It's the implosion in the debt market. That is what I am focused on, and I think you as well. If you are holding precious metals, betting against the debt, becoming your own central bank, that's the reason. It's not because you're expecting hard assets, commodities, physical silver, my favorite asset of all time, gold, platinum, palladium, crude oil, or anything else although crude oil has gone kind of crazy lately, okay? We're still above 105 with regard to WTI, 104, something along those lines. We haven't seen anything yet with regard to an explosion, and I mean a little explosion, with regard to energy, costs of energy moving forward. Natural gas has gone out of control. Okay, but look, that all aside here, the whole business of you and I betting against the debt, becoming our own central bank, we're not looking for a gain here to happen anytime soon until we get this implosion in the debt markets. We're just anticipating where cash or how cash is going to move through the markets. It's very, very simple. Again, we're in a technical correction with regard to the S&P 500. 13% off of the record high is a technical correction. Just covered this at length. So, okay, we don't care. I don't care. I don't care about this thing. I think we're in the right spots. You must have exposure, in my view, still to equities, oil and gas producers. You need some financial exposure here. Yes, the banks, I'm referring to them. You need exposure to commodities. You understand this? At least I hope so. Energy. I mean, it's pretty straightforward if you are so inclined. Being that war is going to expand, you might want to look at defense contractors, and at the same time, continuing our mechanism of betting against the debt, becoming your own central bank. And to me, that also includes having cryptocurrencies in your portfolio. I've outlined this to the point of nauseam. People, look, you and I are clear at how cash moves through the market. We remain still, and I would believe, a risk-on environment. Why? We're in a technical correction. That's it. Okay? So, stop buying the bullshit dog shit that, a lot of these doomers are trying to sell you. I mean, I am the furthest thing from a doomer that you'll ever find. I don't get rattled, ever. Okay, that's number one. And I don't try to sit here and scare anyone. I want you to understand the current situation so you can make clear decisions as to where you should be putting cash to work. And it should make sense to you. Look, if you are not participating in the stock market, that's fine. At least you should be looking at the bigger picture, betting against the debt, becoming your own central bank, preparing for the implosion in the debt market, which is going to occur. We're going to get a massive sell-off here at one point. Rates are going to spike in an uncontrolled fashion. There's nothing going on in the debt market right now. Looking at the 10-year yield being the benchmark. Okay, that's why we focus on it. Okay, nothing going on here. The relative strength of the dollar. Okay, is anyone here, anybody who follows this blog, surprised about that? No, I've been explaining that we're going to see the relative strength or the comparative strength of the dollar to other currencies stay high. And this is a phenomenon I spoke about a long while back. And what have we been seeing? Higher dollar strength, relative strength, higher. While its absolute strength, its purchasing power is dissolving at its fastest pace ever. And we have an environment where the Federal Reserve continues to balloon the money supply. There has been nothing going on here. People talk about quantitative tightening. Really? Show me where it's happening. Show me where. We have a Federal Reserve who has done one thing, and that is raise the federal funds rate, and we're going to get that this week. We're going to get a 50 basis point hike to the federal funds rate. Markets already priced this in. Okay, so that's the truth. I sincerely believe, and I covered this recently, the Fed is going to, after this 50 basis point hike, I'm going to just throw this out here, people. I think the Fed is going to back off a little bit. They're going to slow down. Why? Understand the mechanism here. The Fed wants to inflate. They want to continue to inflate, meaning they want to issue debt through one door, buy it back through another door. The issuance of debt is the ballooning money supply. The fact that the Federal Reserve is now taking that and buying assets means their balance sheet is going to continue to inflate. They have tapered zero. No taper has happened. This is another lie that is being sold to the people of the world. What else would you expect from a criminal organization of the highest possible order? And you got the mainstream propaganda ministries, what are they doing? They're feeding you the bullshit, the dog shit, the cat shit, sprinkled with bird shit, either in solid form, or they're making you drink this stuff. Look what they're doing to people. They have created legions of zombified freaks who are caught in a very desperate situation here. I've explained to you that, members of the middle class, however many of you are left out here, you're under attack. You have a target tattooed on your face. Let's cover some of that real quick. So we just found out, and this is pretty sad, honestly, home foreclosures year over year, pay attention to this and look it up for yourself if you don't believe me, are up 132%. Home foreclosures are up 132% year over year. You see, this is the kind of stuff that's hidden in plain sight, and you're not allowed to know. Imagine, for example, if Fox Business, CNBC, Bloomberg, one of our illustrious politicians were to tell you that home foreclosures are skyrocketing. Well, people might start to question the narrative that our economy is booming and everyone is rich. Obviously, we know that this is a complete falsehood. By their own admission, our economy is shrinking. You and I, that's not news to us. Real wages cratering, inflation surging out of control, factory activity unexpectedly falling, the purchasing managers index, again, another key indicator, one of the Fed's favorite, as a matter of fact, is falling off of a cliff, proving yet again that our economy is in free fall. And this is not just a phenomenon here in the United States. So again, all this stuff is hidden in plain sight. You just got to know where to look for it. All right, so keep that stuff in mind. So let me just cover a few things here moving further. So let's recap real quick. The market is in a technical correction. That is, we have fallen, the S&P 500 has fallen more than 10%, but not more than 20. We are down 13%. That's all that's going on here. If this is rattling you, if you're buying the bullshit that we're in some kind of collapse right now, that's on you, okay? That you're not understanding the market. If we get to that 20%, look, eventually we're going to get way beyond that. I've told people this market is going to fall 80%. I sincerely believe it might even be more than that. When we get the debt market implosion, which is going to happen, and you see that 10-year yield, bang, 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 very rapidly, that's going to melt down the stock market. The stock market is going to overcorrect. We may have a greater than 80% fall in the S&P 500. Listen to what I'm telling you, greater than 80. That would create a massive risk-off scenario, and commodities are going to go to the moon. This is why you're holding gold, silver, and in my view, cryptocurrencies, and I'll cover it real quick. Why cryptocurrencies, Greg? Why do you believe that? Well, I'm going to tell you yet again, because I believe the market capitalization of cryptos is going to balloon during that period. And I believe, sincerely, we will see cryptocurrencies go higher than most people can possibly imagine, along with other commodities too. Again, are we going to face a resource problem? People, commodities are going to skyrocket. Inflation is going to balloon like you can't possibly imagine. And then a whole new system is coming. A whole new system, a new set of rules. For how many years have I told you this, if you've been with me? A new set of rules, a new paradigm is coming. Well, we are here now. And any mechanism that they can utilize, whether it's disease processes or manifesting some other kind of thing along those kind of lines, whether it's the war, the expansion of war, crisis to crisis to crisis, they're going to use these mechanisms and they're going to sell them to you via the mainstream propaganda ministries to force you to back unbelievable amounts of spending thrown at every single crisis. You knew this was coming. I told you about this, and it's not going to stop. This is a mechanism to keep the debt-based economic model going. Period. The end. We're going to be throwing tens of billions, hundreds of billions. Collectively, it's going to be in the trillions at this new war, which is going to expand. You have arms deals going on all over the place like we have never seen before. We covered this at the onset. I had said that war over there was the biggest arms deal in the face of the earth we've ever seen that's being put together, and we nailed that. You and I, we knew that was going to happen. All right, now that this war has started, well, they're going to fuel it. You are being forced to back a war. Imagine my surprise. It's very simple for the people to be strung along and have to get behind every single crisis because it's a crisis. We already threw $3.8 trillion at COVID. Now they have COVID as well, and they're going to be throwing all kinds of cash at this war. All right, and any other crisis, energy crisis, food shortages, energy shortages, blank, blah, blah, blah. So, but you're well aware of that. Anyway. So let us move forward a little bit here. In my view, people, as I've been explaining to you, the Federal Reserve, going back to this hideous institution and other central banks working in concert, they will continue to inflate. So just understand that. The Federal Reserve, by raising the federal funds rate, which they will this week, is not going to at all affect the pace of inflation. As a matter of fact, the Fed is guaranteeing more inflation is coming. You know the mechanism here, people. I've covered this at length. And the Federal Reserve is using, yet again, the propaganda ministries to sell the lie. That is, by raising the federal funds rate, they're going to be able to slow inflation. Can't happen. Without raising the benchmark rate higher than the current rate of inflation, which continues to surge, all they're doing is fueling the inflation hyper bubble. You understand? There's another bubble for you. All right, people, look, I have covered a lot here for you. I want to hear from you. Let me know where you stand on all this. And lastly, today is the first of the month. Okay, the first of every month, I humbly ask for your support. Hey, Greg, you know what? You're doing a really good job. I want to support your work. There is a link in the description of this video. There are two links in the description of this video. One, again, I hope you choose to support my work. Send me $5. That's all I ask for, $5 a month, okay? I work my rear end off for you. I even come out here on a Sunday and do this. Believe me, I could be doing something else, but I feel a responsibility to all of you. We are responsible for each other. We got to care about each other, love each other, be charitable to each other. So if you feel like supporting my work, and I hope you do, there is a link in the description of this video for you to do that. And again, I just asked for $5. I don't even ask for corrected for inflation, $5. If you want to support my work with cryptocurrency, I love cryptocurrency. There is also a link in the description of this video for that. Please, I really hope you choose to support my work because I got your back, and I hope you have mine. I love all of you. I will see you in the morning, and I think we got this big time. I'm out of here.